JP Morgan supports businesses on their journeys from seed to scale. Whether you're in early days or strategizing your exit, JP Morgan has tailored tools to provide personalized guidance at every stage of growth. And with unmatched reach across industries and markets, JP Morgan can help founders scale with confidence. Find out how JP Morgan helps founders at jpmorgan.com/grow-without-limits. JP Morgan is the bank of the innovation economy. And welcome to the Tearsheet Podcast, where we explore financial services together with an eye on technology, innovation, emerging models, and changing expectations. I'm Tearsheet Editor-in-Chief, Zach Miller. Today, we're joined by Camila Vieira, a partner at QED Investors focused on Latin America. Camila brings a wealth of experience to our conversation, having established herself as one of the region's most influential fintech investors. Camila joined QED in 2022 as the company's first employee based in São Paulo, Brazil, where she focuses on early-stage investments. As an investor and operator with experience working across different regions, she brings a well-rounded perspective to the table, connecting founders and startups to valuable resources while leveraging QED's deep fintech expertise. And prior to joining QED, Camila built her career at the intersection of technology and financial services. She started at Moody's before joining Goldman Sachs to focus on corporate credit and economic risk. She went on to join the global strategy and corporate dev teams at Ceridian. And most recently, she spent time at Hotmart, a Brazilian tech unicorn whose platform facilitates sales of digital products, enabling creators to build, monetize, manage, and grow globally. And today, I hope we'll explore the dynamic Brazilian fintech ecosystem, discuss cross-border investment opportunities, and also uncover lessons that U.S. financial services professionals can apply when looking at other markets. Camila, welcome to the show.
Thank you for having me, Zach. It's a pleasure.
And, we were chatting before it started. This was months in the making based on your schedule. You've been traveling and you said you almost feels like it's July and your year has started. Maybe we can start there. Like, what have you been focused on? Like, why have you been so busy this year?
In some ways, we have, when you invest in emerging markets, you have years where everybody's excited about what you're doing. And then some years where you are the outlier and everyone is, walking away from what you've been focusing on. So I think from a QED standpoint, we've been investing in LATAM for a while. But one of the differentiations is that we've actually stayed and continue to be excited. I think we have more of a long-term view. And that means that, for every conference that kind of was applicable to us, both from banking, payments, cross-border, vertical SaaS plus fintech, all the kind of themes that we've been excited about, we've been vocal about being present and really showing that we are a global forum that continue to be excited about the region. And then in parallel, right, like the world is surprising us with new stuff happening every day. And that from a regulatory standpoint, both Brazil and US and Mexico, there's just so much that has happened in the past couple of months. And we do spend quite a bit of a time with regulator, with fintech associations, in some ways trying to be the voice of a portfolio as well. Mm-hmm. Both as a way to improve regulatory, but to help our portfolio companies as well, right? Like so that they know how to work alongside regulators instead of against them. So I think it has been a mix of that, of mm-hmm. building the awareness for the market that we are around, we're open, we're excited, and then also trying to keep up and in some ways influence what's happening around us.
I think you said something really important also. It's like you said, not only are you in market, but you stayed in market, you stayed committed to the market. And I've seen, obviously, there's cycles in all of fintech around the world. And, short-term money comes in when there's big opportunities and it leaves sometimes in the troughs of the cycle. How important has staking out your presence there been for you as you're building, your practice in Brazil and LATAM in general?
I think we can think about this in two layers, like one, the value to the portfolio companies, but then two, the value to our LPs, mm-hmm. right? So from a fund perspective, if you're only investing LATAM when everybody's excited about mm-hmm. LATAM, guess what? Your average valuation is going to be extremely high, which means you better be right. Mm-hmm. And in reality, I think investing is a statistic game. We are building a portfolio that hopefully all of our companies perform, but we know that statistically that's not what happens. And having stay in the region for ups and downs, that also means that our valuations, our entry valuations are quite different versus if you only invest in peak, right? So I think that's one piece that for LPs, there's a lot of value in there. Just if you're right about the long-term outcome, you better build the best portfolio. And building the best portfolio means just picking the right companies and not necessarily only when the market agrees that that's a good company. From a company standpoint, it's really knowing the nuances, what's possible, what's not possible, how to move the needle to get things done. And that goes from hiring the right people, from knowing who to call the regulators, knowing exactly what terms in a debt fund you can push, you can negotiate, you can get better. And mostly just knowing the nuance. Like there's a Brazilian fruit in Portuguese, it's called jabuticaba. And that's a term that a lot of the local funds would use. Like this is a jabuticaba risk. It's something that only if you know Brazil, you will get it. And I think for QED, like for me to be Brazilian and have the global experience, but be able to really catch the jabuticaba understanding, it's something that I think we take pride in, and we try to bring that back to our portfolio companies as learnings. But yeah, it's an evolving thesis for sure. QED as a whole, we are a global fund. So for those that don't know, QED initially started more as a North America and Latin America, but now we are very much across Africa, Asia, Europe as well. And in markets where our presence is growing, we've learned kind of that playbook of the more you are plugged in, the best you actually perform. So that is something that, the future will tell systematically if we're getting it right or wrong, but we feel high convicted that this is kind of the way to do the global plus local.
The global plus local. Could you do LATAM investing without having a local investment team on the ground?
You can, and we have, right? Like, so before I joined, we had amazing years and amazing investments, including Nubank, Quintondar, Creditas, multiple with our team being in the US. I think what we, as a fintech specialist, our core secret sauce is that somebody at QED has done, build, or try something within that thesis that we typically invest. That's what we try to do. And that can be the only secret sauce, and that's fine, right? And then you partner with the local funds that know and do that. With the local funds growing and more local funds emerging, which is all healthy throughout for everybody, that does bring, I think he raises the bar of, what do I as a specialist need to know? And I think at QED, as we build our defensive moat, then it becomes, okay, we're going to do the fintech specialist, but we're also going to add the local flavor. For regions where the local funds aren't as developed, only doing the fintech piece is enough, right? Like, because your comparison bar isn't very high. So I think for us, like, it's a mix of how convicted are we? Can the local expertise really add a differentiation, or just, marketing to say we have it? So I think we try to keep the best setup to really optimize for portfolio, for LPs, but also for team dynamic. Like if you look at our global team, we're actually not that large, like versus other global funds, we're quite tiny. And that's because if you are trying to build an operator heavy fund, you need the quality to be high, right? Like if you pitch that you're operating and then you have like very weak operators, then that team doesn't feel great. Like the companies won't appreciate that. So I think that feedback loop of what is it that we tell founders? We tell founders we're going to be the best fintech advice on the board. That not necessarily is a marketing advice. We're going to be the best fintech. To be the best, you do need the global and local. If you get that local through other means, I think that's kind of flexible. For us, being able to do on the spot, kind of intertwine insights is kind of what we try to do. So since I joined, I've spent a lot of time on portfolio support, kind of doing the extra, like what was the US team, US based team doing before? And what else can I do? And a lot of that was regulators, capital markets, talent, structuring, things that are kind of unique to Brazil. So maybe I'm here to be the jabuticaba expert, and I'm totally fine with that.
I will not try to pronounce that fruit, but given that perspective, then Camila, like, what are some of the themes that you're seeing in market? Maybe you can speak to the portfolio, some of the companies in the portfolio. Those are themes obviously in the rearview mirror. You've made those investments already. I want to talk about that and then maybe talk about the future, like what you're looking to get more involved in.
Yeah, we can think about LATAM in phases. So when we initially started in LATAM, you had very little infra available. You had a limited amount of talent that were willing to risk to leave the big banks to start fintechs. So we did see a lot of the first phase of LATAM to be very B2B focused and more banking. So do more of what we know, do it better, do it with a better experience. Didn't felt like safer to do and execute with what was available. Second phase was as B2C started to see a lot of the fintechs focusing on it, the shift to B2B tried to happen. Like a lot of companies build around B2B, but just weren't as successful as getting market, of having the actual B2C infra work for B2B. So you had a lot of B2B companies that kind of worked, kind of didn't, but didn't close, or kind of fighting their way through it. And in parallel, we saw the expansion of vertical SaaS, plus embedded finance, plus now stablecoin, cross-border, and all new themes that we've been thinking about. And the way I've been seeing LATAM is like, in that process, talent just exploded in amount. Like we just see the ecosystem growing way faster. And now you have some of these teams merging, right? So you have companies that were always going to do vertical plus embedded. AI is just empowering that all together, right? B2B banking, like you see a lot of companies keeping the software phase and going straight into more of a vertical AI play. Structure, like you had the Central Bank of Brazil and a lot of regulatory change in Colombia and Mexico as well, that took that old infrastructure to just be like way ahead of even the US now, with PIX, with other centralized way of reporting as we think about fraud, as we think about account to account payments, cash in, cash out. So kind of, if we look at the evolution of LATAM, you went from limited talent to B2C to a struggling mix of companies trying to really catch up to the US. And now with the right talent, with the right infra, and with the right regulatory, we're seeing this vertical SaaS plus embedded really kick off. We're seeing B2B kick off. We're seeing cross-border kick off. There, both in Mexico and Brazil, there has been a lot of changes around energy and climate. So there's a couple investments that we've made in this thesis that we've been extremely excited. And of course, with Trump and tariff conversations, both Colombia, Mexico, and Brazil are positioned in an interesting way to benefit and get hurt from all the changes. So I think we've been tracking as well, like as companies figured out what to do, as customers decide what to do, who is uniquely positioned to empower that experience. So I think it's been more exciting. Like now is way more excited because 3-4 years ago, I will look at a vertical SaaS company, for instance, and say, makes total sense. No one has been able to consolidate this market. The manual work is just too cheap for you to go and build the best payroll company. And now that's not quite true. Like AI really has come to make a lot of the themes that we loved in other regions, but didn't think were possible in LATAM to now start to make sense. So I'm super excited about a bunch of themes that are getting unlocked by a mix of what I mentioned. In our portfolio, I can't take credit for this because a lot of these investments were not investments I made and been in the portfolio for quite a bit. But across, Creditas, Quintondar, Sofacio, Loft, Motu, a variety of companies that are really bringing financial services from everywhere to gig economy for solar financing, to auto financing. Like we really do have a quite mix of fintech products in place. And the companies are performing quite well. The other beauty of LATAM is like we always have high rates and inflation is our last name. So as kind of global companies now, especially US companies, are trying to figure out how to navigate, like our fintechs were born and bred to really build around instability. So it feels good to look where our portfolio is now, where most of these companies adapted to a tougher 21 and 22 market. We've been on high rates for quite some time now, and companies continue to perform. Companies that are credit only are performing despite the high rates. So I think it's an exciting time. We can go deeper into any of these themes or companies. Happy to chat through.
Sure.
But a year ago, we were looking a lot into how true is that pitch, right? Will delinquency rise with higher rates? How will the market change with Trump? And now we feel in a much better place. And hopefully, as the market opens for IPOs and so on, I think our portfolio will have a couple of LATAM companies come for air, which hopefully will help us, but also the local ecosystem to show that we can have winners and we will continue to have winners.
Well, I mean, as an outsider, I look at Nubank, as somewhat illustrative of the ability for Brazil, maybe LATAM in general, to be able to launch like a super company there. Are there learnings from a company like Nubank that are applicable to new companies coming out? Are there certain things that Nubank did that you could look at almost like as a mini case study to say, like, this is a model for how to build successful companies in the region? Because they did things a little bit differently from my perspective. Like, I think some of the management came from outside of Brazil, if I have that correctly. They weren't necessarily banking people moving into banking. So there were like certain things there that were, I don't know if those are learnings that you can apply horizontally or vertically. I'm just curious how you look at that story and if it really does matter in that sense.
Yeah. No, I mean, I'm still a very strong believer in the Nubank story and what they're building. But if you take a more pragmatic approach to Nubank, how often do VC say there's so many companies doing that already? That's such
Crowded
a commodity.
market. Yeah. Yeah.
Think about credit banking Brazil.
Mm-hmm.
There's so many banks. There's so many options. The average Brazilian has 4 to 5 credit cards. Like, why do you need the 6th? And I do think, we can try to attribute it to whether or not they, it was because they weren't Brazilian or they weren't part of the ecosystem. I think the one trend that you still have in Nubank today is just that unwillingness to accept the status quo. And part of that is talent, and part of that is really knowing what else it could be and having that vision clear. And in some ways, what we say at QED is that unwillingness to be okay with this quote unquote comes a lot with testing, right? So like you may not have, I think it's
right. You could take that stance and completely lose, right? Yeah.
So like just making sure that you know how to test and you know how to accept when a test has worked or has not worked. That to me is the biggest learning from Nubank, like building a culture around okay with failure, but in not accepting anything but success. And most companies die because they stay on the thesis for too long and they're not willing to see that, hey, maybe this is not the way, and focusing more. I sometimes say like founders fall in love with the how instead of what they're building. It's like, okay, we have a problem. Let's go solve that problem. Let's figure out what is it that actually has product market fit. But no, like a lot of founders fall in love with the initial how. And then if that how is wrong, like they didn't test around it. And I do think that matters. And I'll give you a couple examples. Like Mexico is very different than Brazil. And as Nubank entered Mexico, most companies, when they enter a new country, they say, I've done this well in my core market. I'm going to copy and paste. And I think the more we talk to Nubank, the more we know, and we know them quite well, you see that they don't have that approach. They have the testing approach, right? Like Mexicans just bank differently. They buy differently. They interact with money differently. If I go and do, here is a credit card with plain credit and don't think about how to unlock offline, because a lot of people do offline purchasing in Mexico. How do I do cash in and cash out? Like, I do think as you play where this testing comes out, is that the experience for new markets can look very differently. So I don't know that I attribute it to them not being Brazilians. And I do think, Brazilians tend to, I say they love everything that's outside of Brazil, but they criticize a lot of the stuff
Local stuff.
that's in Brazil. But I think this key trend of the success founders is really just test, 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 test. So we have a couple portfolio companies that have been extremely successful. And then when we join the board, we bring this testing approach and you just feel that tension of, as they're learning how to do it. And then when that becomes kind of the status quo of how they operate, it's always funny to look back and say, remember when you used to just do and not test? So I think we have the interaction with founders quite a bit, and that's a playbook we try to follow. And a lot of that comes from Capital One. Like if you look at Nigel, you mentioned testing and data and what does the cohort say? And I see myself saying a lot of that, and that's definitely a QED thing.
Do you see also, Camila, in the region, was there sort of a returning diaspora that also helped to impact the talent pool? You talked about these different phases of growth and maturity, I guess, in the region. Was some of that because you had Latin Americans who had gone to the US and worked for some tech companies there and come back? Did that play any part of the story?
If you look at Mexico, that I would say
Really?
most successful founders have spent time in the US. So the easy answer is definitely yes. In Brazil as well, I would say the last two, what's outside of Brazil is pretty. You see the founder of Creditas is not Brazilian, the founder of Nubanks. In some ways, having that aspiration and seeing that it can be done and it can be done in your country, I think inspire a lot of Brazilians to leave Itaú and go do fintech, to leave central bank and start their own fintech. So I think we have seen that evolution in Brazil. In Mexico and Colombia, a lot of them went to business school in the US and came back. I do see now a maturity where before they were coming back from MBAs and going to operate in Mexico, where now they have done MBA plus operating in the US and they're coming back. So I do think like talent, as we continue to evolve the ecosystem, only tends to get better because a little bit of like the US experience isn't only business school. Like, I mean, I'm pitching my pitch here, but operating is hard, and you just learn so much for failing at it, for just really trying to figure it out. Okay, what is it that I don't know? What is it that others have tried to do? And building team and leadership, and there's so much that comes from operating, that being a success or not. And most success founders have done through that. I'm excited about that second layer
Yeah, I was just
of
going to
operating.
ask you about that. Has the cycle been going on long enough where you're seeing second-time founders come back?
Yes. And that's always a tricky for venture capital, right? Like you want founders to have enough drive to really be incentivized to stay there for 10 years, for 15 years. But at the same time, you want them to have some operating experience. So, we do see this gray area where some founders have sold their initial company. It just wasn't, they made money, they bought an apartment, but they're not set for life. Or at least their ego is not set for life, right? Like
They're still hungry.
they want to go out there. They want to deliver more to the world. So I think we've enjoyed working with second-time founders. Second-time founders sometimes tend to listen less. And sometimes they're right because they've just done more. And sometimes that just means, they've closed off their learnings and the insights from others. So I do think it can be a positive, it can be a negative. And a lot of what we try to do is do, founder assessment and reference checks and talent assessment. But it's an art, right? It's not a science.
Yeah. We're getting near the end of our conversation. I would love to look outwards, I guess, towards the future. Like, what are some of the things that you're most interested in going forward? Some of the trends maybe that you're plugging into? Yeah, I'd just love to hear, like, sort of now that you came up for air halfway through the year, like what's on your plate?
I will split it in two ways. So first, stablecoins, cross-border, CFO tools, everything that was super hard for LATAM to adopt in a software phase. We're spending a lot of time around that. And that goes from, CFO tools, but also fraud and know your customer, risk underwriting, everything that now we can process data faster and better. But also the second phase, I would say, is just lending the plane, right? So we do have a lot of LATAM companies that are either becoming the consolidator of the region or are large enough or trending to be potential IPO candidates. So the second phase for us is very much lending the plane for our portfolio, and that can be IPO preparedness, M&A, really making sure that the risk and build up of the teams are adding up to what a potential public company would need to have. But from an investment standpoint, we are focusing more on generational companies and, less, I would say, potential companies that are good and are growing, but don't have the potential to have a huge outcome outside of LATAM. And that puts us a lot into global companies, right? Multi-country companies, like where the TAM is large enough. So I do see a trend where we will continue to invest in Brazil-only companies because the TAM is very, very large. But our bar for that is higher, right? So, and that's exciting. That's exciting for QED. Then now we have built enough track record cross-region to have a better filter of what works, but what doesn't work, what's possible to get to mid-size but not huge size, where we are very much looking for that huge outcome. So I think it's a good evolution and a good time for us, but continue to be here and make sure that we land that plane right.
Camila, thanks for joining us on the Tearsheet podcast today.
Thanks, Zach. Thanks for having us.